little bit off topic, but we keep seeing these advertisements. Flip through the channels. You see these commercials for send in your gold, send in your jewelry, send in scrap metal, anything with value, almost as though the temporary deflation that rattled everyone, meaning housing price deflation, huge unemployment issue that we're facing here domestically, probably peaking 11-12% in 2010. It seems as though that has caused a cash crunch as the credit card companies, they pull in the reins on extending credit, and we add this all to the mix. And there's this lack of liquidity, and they're turning to whatever they can get their hands on to raise cash. People turning in their valuable gold, old coins, and things of that nature. Something tells me that that's not indicative of a top. That's more suggestive that there's much further to go in the precious metals market.
You're, I think, making a very good point. A lot of people have said this is an indication that, we're in a top in the precious metals. I don't see it that way at all. To me, gold is performing the role that it always does perform, and what all of the people who are doing who are cashing in gold are recognizing that we're in some economic hard times, and in a rainy day, sometimes you have to dip into your savings, and that's what gold is all about. Savings is accumulated wealth for spending at some future date. Now, hopefully, you like to spend that wealth in good economic times, but sometimes you have to dip into your savings account when you need to in bad economic times. We're in bad economic times, and, as far as I can see, with the unemployment rate rising the way it is, and likely to go much higher over the next few months as the economy continues to contract, that, we have some more difficult economic times coming, which probably means more banking crises as well.
Moving on to the Federal Open Market Committee's latest meeting last week, of course, as expected, they held rates steady, artificially low, practically at zero. Meanwhile, we hear of housing mortgage rates soaring as high as 8, 9, even 10%, depending on the individual or family's FICO scores. At some point, James, they are going to raise rates again. That might put a crimp on the commodities play. But wouldn't you agree that all throughout the 70s, for the most part, rates continued higher right along with inflation and precious metals? So ultimately, it may not be the death knell that folks are expecting for precious metals.
Yeah, you're exactly right. Nominal rates are not what is important. It's inflation-adjusted rates that is the important thing to watch. In other words, you take the interest rate less the inflation rate and determine whether you have a relatively high interest rate thereafter or a negative interest rate. Right now, inflation-adjusted interest rates are negative. In other words, if you put $100 in a bank on January 1st, on December 31st, you're going to have less purchasing power than you did inflation-adjusted from the beginning of the year. There's no incentive to save money. What happened in the 1970s, the late 70s, early 80s, when Volcker was put in the Federal Reserve and given the mandate to save the dollar, is he kept raising nominal interest rates until eventually the real inflation-adjusted interest rates were 6 or 7%, which is a huge, huge number. Normally inflation-adjusted interest rates are 1.5% to 2%. So to go to 6 or 7%, it eventually convinced the market that he was intending to save the dollar. That ended the big boom in commodities that we saw back in the late 70s and early 80s. And, the dollar started a bull market under the early years of the Reagan administration. We're not seeing that today. We have negative real interest rates. I don't think the Fed's going to be raising interest rates for the foreseeable future for quite some time, because I think that low interest rates are going to save the economy. The tragedy is that low interest rates are not only going to do nothing for the economy, they're going to kill the dollar. And by killing the dollar, then you're really destroying the economy because everybody gets hurt.
You've been monitoring the inverted head and shoulder or the upside down head and shoulder, a bullish pattern in the yellow metal for some time. That certainly bodes well for gold, with indicating a move to maybe 1250, 1300 in the foreseeable future. And also we see in the XAU a very interesting pattern developing, an explosive move above that all-important 200-period moving average, particularly in the weekly chart, that so many of the big traders keep an eye on. This all looks constructive from my perspective for precious metals. But, there's always that voice in the back of my mind that says, that maybe another head fake before we finally break through 1,000. What signs are you watching for that ultimate 4-digit party that we're all looking forward to having for gold?
Head fakes are always possible, but, don't get thrown off base by the head fake. What you have to do, and this is the way I've been recommending it all decade long, is just every month, accumulate some precious metals. View it to be saving, but you're saving sound money. You're not saving depreciating fiat currency. Some months when you buy, you're going to be getting at a higher price. Other months when you buy, you're going to be getting at a lower price. But by dollar cost averaging in this way, in the long run, you'll be doing very, very well. And what you're doing is accumulating an asset that's going to do well in this dollar bear market, and that's the important point.